Imagine a fortune so vast, it's more than the GDP of some countries. That's the kind of wealth Warren Buffett commands. This is not an exaggeration. Warren Buffett, the Oracle of Omaha, sits comfortably among the world's wealthiest individuals. His net worth? Well, it hovers around the stratospheric mark of $80 billion. Yes, you heard it right, $80 billion. Despite this mind-boggling wealth, Buffett leads a surprisingly modest lifestyle. He still resides in the same house he bought in 1958 for a mere $31,500. No sprawling estates or luxury yachts for this billionaire. His frugality is legendary, as is his love for a good bargain. Buffett's wealth is a testament to his investment acumen and his steadfast adherence to the principles of value investing. But how did Warren Buffett amass such a colossal fortune? It all started in Omaha, Nebraska. Born in 1930, Warren Buffett's journey to becoming a billionaire investor started from humble beginnings. In the heart of the Great Depression, a young boy named Warren Buffett was born in Omaha, Nebraska. His father, Howard Buffett, was a stockbroker, and it was from him that Warren first learned about the world of finance. His fascination with numbers and business was evident from a very young age. By the time he was 6, he was already buying 6 packs of Coca-Cola to sell for a profit, showcasing an entrepreneurial spirit that would later become a defining characteristic of his career. Warren's interest in finance wasn't limited to small ventures. At just 11 years old, he made his first investment, purchasing 3 shares of City Service, an oil service company. This early dive into the stock market wasn't immediately profitable, but it taught him a valuable lesson about patience and the importance of long-term investing, a principle that would guide his investment philosophy in the years to come. Throughout his teenage years, Warren's entrepreneurial ventures continued to grow. He delivered newspapers, sold golf balls and stamps, and even owned a piece of a racehorse. By the time he finished high school, he had already saved more than $5,000, an impressive feat for a teenager in the 1940s. His early experiences with business and investing didn't just earn him money, they shaped his understanding of how businesses worked and how value was created. He learned to spot opportunities and to understand the value of a dollar. These lessons, learned at such a young age, became the foundation of his investment philosophy. Warren Buffett's early life was a clear indication of his future success. His fascination with numbers, his entrepreneurial spirit, and his early experiences with investing all contributed to his understanding of business and finance. This early passion for finance and investing set the stage for Buffett's future success. It's a testament to the fact that the seeds of greatness are often sown in the earliest years of life. By the time he was 30, Buffett was running his own investment partnership. This was no ordinary partnership, mind you. It was the Buffett Partnership, a venture that would mark the beginning of an investment legacy and set the stage for the acquisition of a textile company named Berkshire Hathaway. Buffett formed the Buffett Partnership in the late 50s, bringing together a group of investors and pooling their resources. This wasn't a mere gathering of wealthy individuals. No, this was a strategic move, a calculated decision to leverage collective wealth for greater financial power. And it bore fruit. It bore a lot of fruit. The partnership consistently outperformed the Dow Jones Industrial Average, proving Buffett's investment acumen and setting the stage for bigger things. Now let's talk about Berkshire Hathaway. Originally a textile manufacturing company, it was struggling when Buffett first laid eyes on it. But where others saw a sinking ship, Buffett saw an opportunity. He began buying shares in the company, and by the mid-60s he had enough control to change its direction. Berkshire Hathaway became the primary investment vehicle for Buffett. He transformed it from a textile company into a holding company, a move that allowed him to invest in a wide variety of businesses. From insurance to utilities, from railroads to retail, Buffett used Berkshire Hathaway to invest in them all. And here's the kicker. Buffett's strategy worked. Berkshire Hathaway's stock price skyrocketed from around $7 a share when Buffett first started buying to hundreds of thousands of dollars per share today. This success wasn't built on luck or chance. It was built on Buffett's deep understanding of business, his ability to see value where others couldn't, and his unwavering commitment to his investment philosophy. But Berkshire Hathaway wasn't just a financial success, it was also the platform that allowed Buffett to make his mark on the world of investing. With Berkshire Hathaway, Buffett was ready to make his mark on the world of investing, and oh boy, what a mark he would make. Buffett's approach to investing wasn't about chasing trends. He was a value investor, a philosophy he learned from Benjamin Graham. Now, what exactly is value investing? It's a strategy that involves buying stocks that are undervalued compared to their intrinsic value. In simple terms, it's like finding a $10 bill lying on the ground and picking it up for only $5. Warren Buffett, the Oracle of Omaha, took this principle and ran with it. He wasn't interested in short-term gains or getting caught up in the latest market fads. Instead, he focused on companies with strong fundamentals and stable earnings that he believed were undervalued by the market. Let's take a look at some of Buffett's most successful investments that showcase his philosophy. Coca-Cola, for example. In the late 1980s, Buffett invested in this beverage giant when others were skeptical. He saw a company with a powerful brand, a wide moat, and a product that people would continue to drink regardless of economic conditions. His investment in Coca-Cola has since returned many times over. Then there's Geico, an insurance company that Buffett first invested in during the 1950s. He saw potential in its business model and its competitive pricing strategy. Over time, Geico became a subsidiary of Berkshire Hathaway, and it's been a significant contributor to its earnings. The key to Buffett's success wasn't about getting rich quick. It was about patience, discipline, and holding on to good investments for the long term. He once said, "Our favorite holding period is forever." This underscores his belief in buying and holding, rather than trying to time the market or jumping in and out of investments. By doing so, Buffett demonstrated that value investing is not just about buying cheap stocks. It's about understanding the business, its competitive position, and its potential for growth. It's about believing in the company's value and waiting for the market to recognize it. By buying and holding, Buffett made his fortune. His investing philosophy, rooted in value investing, has proven to be a time-tested strategy for building wealth. It's a lesson for all investors, novice or experienced, that patience and discipline can indeed pay off. Warren Buffett's success isn't just about making money, it's about patience, understanding value, and investing in what you know. Let's take a deeper look into these lessons from the Oracle of Omaha. First, patience. Buffett is known for his buy and hold strategy. He doesn't jump onto the latest trends or panic when the market takes a downturn. Instead, he holds on to his investments for the long term, often decades. This approach has allowed him to reap substantial rewards over time. Patience, it seems, truly is a virtue. Next, understanding value. This is the crux of Buffett's value investing philosophy. He doesn't just look at the price of a stock, he looks at the intrinsic value of the company. He considers things like the company's management, its competitive position, and its future prospects. If a company's intrinsic value is more than its stock price, it's a potential investment. Buffett's ability to spot these undervalued companies has been a key driver of his success. Lastly, investing in what you know. Buffett isn't afraid to pass up an investment opportunity if he doesn't understand the business. He sticks to industries and companies he is familiar with. This approach reduces his risk and allows him to make more informed investment decisions. But there's more to Buffett's wisdom than these 3 points. He also emphasizes the importance of integrity and honesty in business. He once said, "It takes 20 years to build a reputation and 5 minutes to ruin it. If you think about that, you'll do things differently." This mindset underscores the importance of ethical business practices. Furthermore, Buffett is a strong advocate for continuous learning. He spends the majority of his day reading, constantly expanding his knowledge base. This constant quest for knowledge has undoubtedly contributed to his remarkable investment acumen. So, there you have it. Patience, understanding value, investing in what you know, integrity, and continuous learning. These are some of the key lessons we can take away from Warren Buffett's approach to investing and wealth creation. So, while we may not all become billionaires, we can certainly learn from one. Warren Buffett's wealth is immense, but his legacy goes beyond just his fortune. This man, known as the Oracle of Omaha, has indelibly marked the world not just with his investing acumen, but also with his extraordinary acts of philanthropy. Buffett's commitment to giving back is truly unparalleled. He has pledged to give away over 99% of his wealth during his lifetime or at death. His philanthropic efforts are channeled through the Bill and Melinda Gates Foundation, where he has donated billions of dollars to causes ranging from global health to education and poverty alleviation. But Warren Buffett's legacy isn't just about the money he's given away, it's about the principles he's lived by: patience, honesty, and a deep respect for the value of a dollar. These principles have influenced countless investors and will continue to do so for generations to come. In the end, Warren Buffett's story is one of remarkable success, patience, and generosity.